Hey everyone, welcome to today's video. As usual with NEO, it's ups and it's down. The stock is usually only down, to be honest. Again, it's like what, $3.5 US. But all that being said, I would say that there is a huge opportunity. Like if they actually turn things around, this is like one of the best opportunities in the market. I mean, probably the best one ever in my investment time at least. But the issue with NEO is that we are simply like, it's very difficult to trust the management. My biggest worry right now is not the actual valuation. I think the valuation is quite low, like super low, honestly. And if they continue at this rate, remember that just recently, for example, from Q1 through Q2, they decreased the R&D budget by 60 million. And how much is 60 million? Well, it's 12% quarter over quarter. So a couple of these kind of improvements on research and development, maybe cutting down on sales team, for example, SG&A. And they've also clearly mentioned that. So I would say potentially NEO's operating expenses, i.e. like R&D and SG&A, which totaled to around 1.1 billion over the last, let's say, 3 or 4 quarters, might be able to go down to, in best case scenario, maybe, I don't know, 800 million combined. So again, operating expenses going down 300 million or so quarterly basis. That's really good improvement. In addition to that, I'm actually quite confident and quite happy when it comes to Onvo. Remember that they were super offensive when Onvo launched late last year. I mean, the targets were like, yeah, let's say that the targets that they had back then was simply like just too up in the sky. Like, I mean, here you can see that the target for March for Onvo was 20,000 deliveries. And I think if you go and look at the last deliveries now, we can see that Onvo delivered 6,400 cars in June. So they were like way ahead of themselves in terms of managing expectations. But if you forget that now, I mean, that's in history, so a lot has been happened over the past 6 months. I'm actually quite happy with 6,000 Onvo deliveries. Remember, this is only one single car, right? So one single car selling 6,500 cars a month. I'm quite happy with that. I would also say that Onvo L90 is gonna be launched very soon. We just saw the interior, looks really nice. This is a really nice balanced car. Some people might not like the actual look of it, I would say. I've seen like divided opinion on that one. But in any case, I think this is gonna be most likely a good selling car. I would say this car is, as also this gentleman on X is mentioning, gonna be really competitive with Li Auto's L7 and L9. It's probably the same size as the larger L9, but it's gonna be selling at a similar price to L7. So I would expect NEO to have really good delivery numbers on these. If, let's say, in a couple of months from now, the Onvo L90 and the Onvo L60 combined is selling like 12 to 15,000 cars a month, that's almost 10,000 cars more on a single month, right? Compared to currently. And what that does mean, if you actually go back to the, let's say, monthly delivery numbers, right? Currently, we can see that actually year to date, NEO, I believe, delivered 114,000 cars, which is well behind the likes of Xpeng at almost 200,000. But the interesting part here is if you go to, for example, the, let's say, my total quarterly delivery numbers, you can see here in the red numbers there, they delivered, I believe, 72,000 cars this quarter, which just barely reached the guidance that they gave a couple of weeks ago, or let's say 4 weeks ago. But that 72,000 delivery, if you now add 10,000 more on Onvo, or let's say 7,000 more on Onvo on a monthly basis, and 3,000 more on Firefly, we're already up to 100,000. And with the further reduction in R&D expenses and SG&A, I would see NEO's net income, or in this case, obviously, net loss, go down very quickly to minus, let's say, less than $500 million. That is an like substantial improvement for the company and the profitability. But again, the main issue for me is not actually for this one's time. I actually believe the management. I do believe that they're gonna cut down cost quite substantially because that's the only way they currently have to go. There's no other way for NEO. They have to cut down the cost on every single way possible. I mean, some of you nice comments in the previous videos also mentioned the number of employees there is gonna be like 45,000 right now, and it's gonna go down to hopefully, I don't know, like 10-20% less. So everything they can do is a nice improvement. But actually, like, this is the difficulty with judging NEO as a stock, as a company. so much can happen. Like, this company has so many levers to put in order to become profitable. It's just that the management, for some unexplained reason, refused and destroyed the stock price. This is the simply what has happened. This is not a case of a company that don't have any levers to pull in order to save money, right? I mean, they can cut down on the SG&A and R&D expenses, as I mentioned earlier in the video. This company spends on average over the last 5 years between 2 to 4 times more than the competitors on let's say per single car sold. So if Tesla is spending like $1,000 on, let's say, R&D for every single Model S or Model 3, NIO is been doing like 2 to 4 times that number, compared to XPeng maybe 2 to 3 times. So NIO has been super bloated, so they can put that lever. They can also try to be more realistic with the expansion of the the infrastructure for the battery swaps infrastructure. So there's a lot of stuff this company can do. It could have been much worse if this was a company that simply was losing this amount of money and still was quite lean. So that is at least something that goes in NIO's favor. The problem is just my feeling or my fear is that this management is so beyond insane in how they react and how they manage this company that if they get a couple of good quarters where, let's say, they cut down the net loss, who are we to know that they won't find another like vanity project to spend all the money on? Like, if they even become profitable, as they say, until Q4, right, and everything is good and the stock rebounds, who are we to see that somehow this guy is not going to invest in another NIO phone or whatever, like, I don't know, NIO satellites? Or, I mean, this sounds ridiculous, right? But remember that this management, they spend a lot of money on NIO phone. I mean, I always take the example, like in 2021, LG with like history in making phones. I believe in 2021, they sold 24 million phones globally. And still they decided that the scale of their phone business was too low. They only had 1.7 or 1.8% market share compared to the Samsung, Apple and the Chinese manufacturers. So they simply felt like they don't have the numbers to justify the spend on R&D on smartphones. And then all of a sudden you have this like ridiculous management starting making NIO phone, and they manage to sell like 50,000 phones a year. So this is where your investment money goes. Like these guys are in some regard utterly clueless. That is why I'm a little bit scared. But if they actually mean serious business, and if this William Li finally like comes back to reality and is starting to take this stuff seriously, you know, he cuts down on the super excessive amount of money on NIO infrastructure, like battery swap stations, when they are barely used. I mean, again, I always go to the number of swap stations they have currently. I think currently the swap stations are around 3,500 almost. And funnily enough, the latest gen swap stations can handle 480 swaps a day, but NIO is still averaging 25 swaps a day. So they are like nowhere near the limit of the current infrastructure. It's not like, you know, they're at 400 swaps a day and they have 480, so they have to build more swaps stations ahead of demand. No. I mean, they have 25 swaps a day. It's essentially one swap every hour, and they can do like 25 to 30 swaps every hour. So it's just ridiculous why they spend their money on like NIO phone and this excessive build out on infrastructure. But if they actually for once mean business, then I honestly think this company is like super cheap. And this is, you know, this difficult fight between, let's say, this positive scenario and negative scenario on NIO. And everything comes down to the management. Like, they could like literally in couple of months make this company almost profitable. And, you know, maybe also another lever they have too many models, right? Let's stick with like 2 or 3 Onvo models, 2 or 3 Firefly models, and cut down like 6 or 7, maybe 8 of the NIO classic brands, because each of them are selling like 500 or 600 cars a month. So those kind of sales number cannot justify so many different models, right? So remove a lot of the excessive models, so you save even more money. You cut down on the R&D a lot, and, you know, the employees, and also you make just the business more, let's say, more simple, less moving parts, and more focused on the products that you actually offer that are actually selling in the thousands. better service, faster service, more accessible service for all this company across all the geographical locations of this soon to be global company. So again, the problem for NIO, in my opinion, has always been the management, and I know some of you don't like it, but in my opinion, out of a scale of 10 to 1 to 10, the management from me would get a big fat 0 in how they manage this company over the past 5 years. I know some of you don't like it, but that's my honest view. Like, you couldn't find a worse management. Well, it could if they actually would put the company into bankruptcy, which this company is touching at times. But I still, despite all the negativity, think that this company will survive as things stand right now, because I'm assuming and I'm hoping that the management won't find any more vanity projects, and that they mean business when they are talking about, cost structure and cost saving for the company. If they do that, we can very, very soon arrive at a 100,000 to 120,000 quarterly delivery numbers, which would essentially make this company to a break even. And yeah, the stock price in that scenario, I cannot by any means justify the current market cap of 7 billion. This could easily be, if they are break even, this could easily be 20 to 30 billion company, which means that it could 5x from here, and the stock would be like what, between 15 to 20 US dollar. So in any case, this was just a quick update on NIO stock, and I still say that I'm quite happy with Onvo deliveries. I can see this company sell like 3,000 Onvo deliveries on a weekly basis, maybe 15,000 on a monthly basis in a couple of months from now, and that would be just enough to, let's say, make NIO as a company that is selling around 30 to 35,000 cars every single month, right? And in that scenario, if you are to closer to 35, this company could still sell 350,000 cars by end of this year, which is a nice 40% increase compared to last year, and I would be very, very happy with that. Even though I would be quite critical towards the management, yet again, in their like unserious way of not managing the expectations, because by end of last year they mentioned 450,000 deliveries. Why do you like make so much problems for your own sake? Like, why couldn't you say 300,000, maybe 350, and then if you get 400 or 450, that's just, the more the merrier. But why would you like have these excessive targets of 450,000 already by December of last year? Like how? And then in literally in January you start with selling 13,800, and in February 13,000. So like, how can you do that? Again, these guys are like doing some serious self-damage inflicting on themselves. But in any case, despite all of this, I hope that you understand my point of view on NIO is that they have everything at their hands to save the company, and if they do, this is a super cheap stock. That's my point of view. In any ways, thanks for your time. Please like and subscribe and comment in the comment section, and see you in the next one.